Hello, this is Chuck Carnevale, co-founder of FastGraphs, the Fundamentals Analyzer software tool. This is another in my continuing series of articles that were requested by subscribers to our YouTube channel. One of the ones that I found very interesting that I've been asked several times to look at is Bank OZK, used to be called Bank of the Ozarks. It's a approximately $5.5 billion regional bank, originally headquartered out of Arkansas. Has about 250 branches now in 10 states, but it's one of the most interesting, not only bank stocks, but dividend growth stocks that I've looked at in quite a while. So I'm going to start out here like I often do, just by looking at the company's operating earnings per share going back to the year 2000. I want you to notice that their operating earnings growth rate has averaged over 19%. That's extremely high. And as a result, at this long chart, I'm using a fair value reference PE of 19, which is equal to the company's growth rate over this time. So now when I put monthly closing stock prices on the graph, you can see that the price has tracked that 19 PE growth of the company's earnings over time. And as the chart looks, it looks extremely undervalued on this iteration. Now, the company has a great dividend record. They've increased their dividend for 20 consecutive years. And their payout ratio is also very nice. It's averaging about 25% of their earnings are being paid out. But a $10,000 investment in this company in December of 1999 would have grown to over $346,000 as of yesterday's close. And that's in comparison to the same 10,000 in the market would have grown to 19. I also want you to notice that they would have paid out over $33,000 in dividends with a 21.6% average annualized rate of return. This is really an incredible little bank and an incredible little investment. Now, it only yields 1.9%, which is not extremely low. It's almost market average, but the real story here appears to be the growth. But I do want you to notice something. This 19% growth rate is very dynamic. If I chop this up to the last 15 years, you can see that growth rate is 16%. Now I'm using a PE of 16. And the idea here, we're analyzing this to see what is an attractive valuation to invest in a company like Bank of the Ozarks. If I drop it down to 10 years, our growth rate now has fallen to 13.6, and I'm using a 15 PE. Now, when I put the normal PE ratio on the graph, you also see that the market has historically, since 2011, put a premium PE quite often, not all the time, quite often. This is a PE of 18.8. I go back out to that 15-year graph, and the normal PE is about 17. Again, there was this period of high valuation as we came out of the Great Recession here in 2013, and then we had this normal correction, and now we've got an undervalued stock. Now, looking at forecasts going forward, using the normal multiple, I'm using a 20 multiple here. I can choose what multiple I want to put on. So I want to pick a more conservative number. I'm going to pick a 16.5 PE ratio. Now, what this would imply, if the company does grow earnings at approximately 14%, like the consensus of leading analysts are forecasting, then just by year end, this could be a tremendous investment. By fiscal year end 2018, all the way out to 2020, it would still be a 25% compound annualized rate of return type investment. If I go back to the 15 PE, the ultra-conservative valuation, it would still be double-digit potential. In other words, it could generate over a 21% capital gain. Right now, the stock trades at under a 13 blended PE ratio, which I would consider it to be very inexpensive. From a standpoint of the analyst scorecard, I also want to point out that the bank has either met or exceeded analyst estimates virtually 100% of the time. They've hit them 60% of the time and beat them 40% of the time on a one-year forward. And on a two-year forward, they've hit them 40% of the time and beat them 60% of the time. All in all, when you evaluate this bank from these perspectives, it's an extremely well-managed bank with a great long-term record. I also want you to notice that going through both the recession of 2001 as well as the Great Recession, this company's business actually grew. There was no real recession for them, and they certainly weren't, they didn't succumb to some of the egregious activities that some of the big money center banks were doing with all these, excessive collateralized mortgage obligations and loans, etc. So it's a very well-managed conservative bank. It has generated a tremendous track record. The company is currently very cheap on a relative basis to their earnings, no matter how you measure it, and it's one that you might want to take a closer look at. Going into the company's website here for a moment, I just want you to look at their corporate profile and look at some of the attributes the company has achieved. They've been recognized as the top performing bank in the United States based on financial performance 8 years in a row going back to 2011. Their current CEO, George Gleason, has been in that role since 1979. The company was publicly traded on NasDaq under the symbol OZK, and it used to be called Bank of the Ozarks. It's now changed to Bank OZK. If you look at some of the interesting aspects of the company, their highlights, they have $22.2 billion in assets. Their common equity is $3.6 billion. They have $17.9 billion in deposits. They have total loans of $16.6 billion and 252 offices. I think this is one that is worthy of taking a much deeper look into and see if it fits your own investment goals and objectives. This has been Chuck Carnevale saying thanks for watching.